You're watching America This Morning, America's #1 early morning news.
Begin with the Facebook fallout. Investment bank Morgan Stanley is facing increased scrutiny this morning over its handling of last week's IPO.
As Facebook stocks tumble, concern is growing that the big banks gave certain clients the upper hand, leaving everyone else to fend for themselves. ABC's Taman Bradley joins us with more details. Good morning, Taman.
Good morning, Diana and John. Regulators want to know if individual investors were left in the dark about Facebook's weakening financial projections, while big, wealthy investors were warned off. As if the pain from the plunging Facebook stock wasn't enough, now questions about the fairness of the company's highly publicized initial public stock offering.
So let's do this.
As the company was going public, regulators want to know if big banks gave big investors special treatment.
But there are issues that we need to look at specifically with respect to Facebook.
One issue, as first reported by Reuters, may be that 3 banks determined before Facebook stock went public that the company's earnings were likely to be lower than expected, and reportedly only shared that information with insiders, not with the public.
There was this hype that was created. They were going to move the price up, so they go to the insiders to say, listen, if we move the price up, you can sell more stock. Well, they took complete advantage of that, the insiders.
The Massachusetts Secretary of the Commonwealth has subpoenaed one of the banks, Morgan Stanley, in connection with certain information that may have been given to the company's big investors. In a statement, Morgan Stanley said its actions were, quote, in compliance with all applicable regulations. Adding to the mess, an investor has sued NASDAQ over its handling of Facebook shares. NASDAQ admits mistakes, which led to trading disruptions during last Friday's IPO.
While clearly we had mistakes within the Facebook listing, we still want to highlight the fact it was the largest IPO ever.
With Facebook stocks tumbling, it's the little guy like this college student taking the hit.
I ended up selling my shares at an 11% loss.
After losing 11% Monday, Facebook stock fell another 8.9% yesterday, which cost founder Mark Zuckerberg another $1.5 billion. John and Diana.
Staggering numbers. ABC's Taman Bradley in Washington. Thank you.